Broadcast is now starting. All attendees are in listen-only mode.
Hi there, can you hear me? Just type it in the box, because I can't hear you. Okay, and can you see my screen? Excellent, very good. Okay, so this is going to be a bit of a sneak peek for tomorrow's session as well, because yesterday was Sunday and because I was at the office, I thought it was Monday and I kind of confused the days. But we're going to start doing a lot of trainings together. I'm going to be educating you and I'm going to be guiding you so you can actually enhance your abilities and also try and reap the benefits of the demo competition that's happening now. Number one, we're going to begin with a couple of very important points. That first point I'm going to explain to you is this. It's a little secret about becoming successful and actually making money in this industry. As number one, the main principle of everything is that when you lose, you have to lose small. And when you win, you must take advantage of the opportunity and make more money than you lose. So the idea is this. Even if you lose 90% of your trades, the 10% have to make more money than the 90%. And if you can do that, you're going to be a winner in the long run, always. So this is how people become rich in this industry, in stocks, basically in investments in general. Doesn't matter if it's Forex or anything else. You must win more capital than you lose. So it comes to the idea that I said last time, and that is if basically you don't bet, you can't win. But this is a principle that I'm saying for life and for trading. So if basically you don't bet, you can't win. And if you lose all of your chips, you can't bet, which comes down to risk management. And here it is. So this little thing here that I show you is very important. Just a sec. Okay, so this is our risk management calculator. Let's say you have a balance of $1,000. We want to enter a risk factor. The risk factor is 1%. That means our overall allowed risk is $10 on 0.01 lots. That means we have to lower our position, and that allows us to risk this much. So if we increase our risk, we can see that our stop loss is 40 pips, and our overall risk is $20 on a trade of 0.05. So we will use this idea. We're trading a live account. As you see, this is a real account. These are real trades that were open today. And we're going to be focusing on this for some time. I'm going to show you live trading right now, and then I'm going to speak a little bit about everything else. First of all, here is our chart. We're looking at the Euro USD 1 hour chart frame. We have the top, we have the bottom, and we have everything else in between. Our target area is this red line over here. As you see, the take profit for this Euro USD trade that is 11 pips in profit is just above the target area. So it's about 37.9 pips, which is 38 pips, let's say. This here indicates that price is currently overbought and heading into sold territories, which means that people are going to start taking their profits. So everybody that opened trades over here, because the market moves with money, okay? It doesn't move based on anything else. Where the money is, that's where the price will go. We realized that the price dropped rapidly on Friday by a good 200 pips, which is pretty crazy. Then we have this here. The rise here only indicates that over here, people started closing out their sell positions. When you sell and you close your position, it becomes into a buy. So this made the rise of 66, 65 pips upwards. And now we're heading down because people are reselling again as a small correction. There is some fundamental news coming out from the Eurozone in 17 minutes. It's nothing very urgent or very important, but it's the German BUBA monthly report. I don't expect too much movement there, but if it does come out negative, we can see the price head a bit more downwards. Let's say the Euro USD could finish in the red. It's hanging around this area, so I do expect price to head down here. This position was in profit about 15 pips earlier. We didn't close the trade, but next time it comes around that area, I might get out of it. We have a trade on AUD USD, and I'm going to show you what we're doing there. There are a lot of lines. I know it might confuse you, but I want you to focus on the red one here, and I'm going to enhance it and make it bigger so you can see it properly. Okay, so this red line over here indicates a downward trend, and it contracted in this area and it finished right here. What is there? This is this yellow zone here. That means the trend ended right there and it turned into a buy trend. And if we focus on these red lines over here, if we focus on these red lines that I made them bigger now. If we focus on those lines, we realize that it became an uptrend then. Okay? And then it came to this area here, which created a double top. As you see, 1, 2, and then price dropped down. This was our trade of the day. This was our trade of the day on Friday, and we indicated a sell position there. So we actually did make some profits there. We made about 30 pips or so. We could have made much more, but somewhere here was our stop. No, actually, we entered somewhere here, and the stop was just about there. But as you see, price went heavily downwards, right to the bottom of this area. It even passed this level here. Now, since it passed this area there, as you see the yellow line, I know it might seem confusing a little bit, but with enough training, and just after we finish explaining this, I'm going to go into exactly how I do this. It passed this yellow area here. These areas are points of interest. They're very important for us. They don't mean that we sell or buy at these areas. That means it only states that we are getting our attention directed towards this pair. As you see, I opened a sell position of 0.10 lots, so 10,000 Australian dollars worth. The position is in a small profit. It is reversing now, which is totally normal. But if everything goes well, the position will head towards this area here. And as you see, the two white lines, we're expecting a higher movement downwards. So the trend upwards looks like it's ending. As you see, it went heavily down, then up, which could be a good correction, and then downwards. It doesn't mean anything because you can always be wrong. That is why we have a stop loss of 45 pips. Stop losses are a must. Okay, we need to lose little and win much more. So that's when this comes into play. We enter our price, we enter our risk. It gives us this. It's only the green areas we enter, and I'm going to explain to you how to use it face-to-face over Skype. So we're going to wait a little bit more. We're going to try to do a day trade on these trades. Maybe leave this one open if we see good indications that it will continue going down, and we might even increase the volume on this trade if we get more confirmations that price will continue going downwards. So let's do this from scratch very quickly together. What pairs do you trade? Just send me that in a message and just tell me, and then I will, your most favorite pair that you trade. Just send me that in a message, and then I will be able to do it very quickly on that pair and show you exactly how I do things. Just a sec. Okay, Euro USD, excellent. Okay, so here it is. I'm going to open a new chart, Euro USD. Here it is. I'm going to use my template over here. And we're going to zoom out all the way. Here's the position that we have. I'm just going to close that out so we don't look at that. And I'm just going to do something very quickly. I am using Fibonacci lines, but this has nothing to do with Fibonacci. I'm just doing it for quickness. So you see I got the top, I got the bottom. I'm going to get the center. I'm going to get the other center. So this is the 25% area. I'm going to get the 75% area. Now I'm going to do the in-betweens. These are extremely important areas of interest. They're not buying or selling signals. They are areas of interest. So we've added our lines very quickly. I'm just going to make the center of everything. So here's the center. I'm just going to do that for you very quickly so you can see it as well. We're going to make that white. Okay, this is our center. Okay, I'm going to explain this to you tomorrow a bit better, what the center is and how it works, but let's just head into this really quickly. And I'm going to show you how these areas are working. As you see, price comes here, drops, we have a consolidation of first area, drops, we have a consolidation of second area, drops, again consolidation, and keeps doing the same over and over and over again. We see that these points are very important points of interest. And since price is heading out of overbought area, over the overbought zone, this only indicates to us that we are very interested in this pair. Because I already have a position on this pair, I am not going to open more. As you see, the position is right here. It was opened on the 21st, which is today at 10 in the morning, which is 9 in the morning your time. We're looking at this area now, so we're waiting for it to drop. What could occur is two scenarios. It can and will come to this area, okay, around this area. What that means is it could create a double bottom. A double bottom is very interesting for this reason. I'm going to show you right now. So these double bottoms, triple tops, and double tops have a 97% rate accuracy. You want me to show you why and how? I will show you right now. So this is an ascending double bottom, double top, because price was heading upwards, as you see before it broke that area, and then it created a double top, which means price goes down. Let's just find another double top or double bottom and just very quickly. Okay, here we go. So we have something similar, but it's not really concrete. Let me just find one. They're always around, and when they happen, we must be very interested in them. Just a second. Oh, here we go. Nope, we don't have anything that interesting on this pair yet, but let's go on the other ones and I will just find you a double top or a double bottom and just show you that. We have on the Euro GBP for sure, because I've been following this pair for some time. Here is a triple bottom. This is very important for you to understand that if price comes, first of all, we have a point of interest. As you see, it's a very powerful line because it touched here and just flew back up. And then when it came here again, it created the first bottom, price goes up, comes to the second area of interest, price heads down steadily and comes here, and sure enough, with the next candle, it shoots off. Okay, so these are very important points of interest because if it doesn't break this area, price is going to fly up, and it did 70 pips. Price came back down, and it created a third bottom. The third bottom indicates that the price is even stronger, and you can see a double of this move upwards And sure enough, there you go, 114 pips up. Then we have a similar situation here with one top, second top, price goes down, consolidates and goes down again. So we could have taken a good 40 pips here, or even 20 pips or 30, 10, doesn't matter. We have double top here as well, and I can show you this much better with line chart. You see this? Double top. That means down. So this is just a training of what we're going to be doing tomorrow, and I want to show you even live how we're going to be opening some trades. But let's just try and find another point of entry that could help us out. So this is a very, very strong scenario over here. Let's go to the Australian dollar. I already showed you this one. Let's go to this one. I'm sure we're going to find something of interest, but those lines that I drew are extremely, extremely important. And as you see, I don't use much indicators. I just use this one over here, which is more of a leading indicator, and I just use them for corrections. I do not use them to enter trades. They're not buying or selling signals. I have to mention that again. They are entry points, so they're interest. Okay, we become interested in these pairs. For example, you see price touched over here. That doesn't mean we sell straight away, because then we're in a risk. We have to stay 1, 2, 3, 4, 5 hours until the price went down. So it could be dangerous. Those are 5 crucial hours. So we can't trade blindly. As I said before, if we don't bet, we won't win. But if we lose all of our chips, we can't bet. So we have to take care of those chips. We have to take care of our capital and make it work for us. That's the most important thing that I'm explaining. We have to make our money work for us. I just have to explain to you that there is nothing that you personally can't do. If you really want to do this, you've got our backing as number 1. And as number 2, believe me, you can achieve it. But you've got to have desire, you have to have organized thoughts, and you have to be very organized as a person to get this done. It's not rocket science, so it's very easy, and it's been done before, and it's being done every day. Let's just go to USD CAD. We see similar lines, but now I'm just going to remove everything and just show you very quickly how I'm going to do this again, and look how interesting these points are going to become and how useful they're going to become. So we got the 1 hour time frame. We zoomed out fully, and I'm going to do it again. Okay, I'm going to get the top. I'm going to get the bottom. I have the top and the bottom, and I have the center. Okay, this is the center. We're going to get the 75% area, connect it with the 50% area. And look what we have. Bam, right there. Price stops. Price shoots off, shoots off, shoots off. What is this? Double top, double bottom. Look, I'm going to show you while we're doing this. We've got a double bottom. Price touches, goes back up, touches, goes back up. Price touches, goes back up. Price breaks, comes back, bam. So that means, you see, if you rushed and you sold somewhere here, yeah, you would be in a profit, but right after that you would be in a loss. And many people would get scared here and would probably close their positions or get stopped out because their stop is not associated with the risk management. So they would open a bigger position than their account would handle, and they would be out much quicker, and then this would happen, and they would say the market is out to get them. So these are creatures of circumstance, and we're not doing that. So as I showed you, price moves around these areas, and we can find many of them again. And I'm just going to do it one more time, and I will show you exactly what I mean. So we're going to get the bottom part here as well, the 25% area. And we can see a strong area of interest. And we can see that correction over here as well. So the USD, every pair is very different. Some pairs will just vibrate between these areas. And by the way, this is law of vibration I'm teaching. That means this is associated with atoms and very other different things that coincide with vibration. So you can just write in Google the law of vibration, and you will understand what I'm doing. It won't write anything about financial trading, but it's definitely associated. So you see, different pairs vibrate differently to price areas. As you see, you can always create things out of nothing. So every picture should be something. You see that price touched here, touched here, touched here, touched here, touched here. Price broke, but yet still came back down and then broke. So it indicated something very strong for us. But look what we've got here again. These are very important things to look for. You must look for them. Okay? If you want to be successful, you must look for these points. Look at that. Touch, drop, consolidation, up again, and dropped again. This is very easy to do. And with the right guidance, which we're going to provide to you, you're going to be able to do it frequently. But before anything, we need to put you and create you. Okay, we have to put you in the correct state by creating you as well. So we got 0, 25, 50, 75, 100. Now let's put in betweeners of this. Now look how the price will start vibrating in the middle of that as well. You see the price is vibrating and dropping, vibrating, dropping, vibrating, dropping. It's very easy to see. And like I said, some pairs work differently. So we have to trade every pair differently and take every day differently. So again, vibrate, 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 vibrate. Broke. And look when it broke what it did. This break created 160 pips. This break created 97 pips. As you see here, double top. We showed this already. Another double top. See that? Very easy. Here's a double bottom, or even a triple bottom almost. So let's go to this point now, and look how it's going to vibrate beautifully. Vibrations, vibrations, vibrations. As I said, these are areas of interest and not buying or selling signals. These are just areas of interest. So the news is out from the Euro zone. It should be out actually right now. I'm not sure exactly what happened yet, but so again, area of interest, area of interest, area of interest. Plenty of them. Plenty of opportunities to buy and sell, as you see. And we did this in a couple of minutes. What do we do then? We stick a few momentum indicators in there, and we just want to judge where momentum is going. We don't really care much about anything else. We just care about momentum. So as you see, momentum is quite high. We are not expecting a drop anytime soon in the USD CAD, but again, that could happen. And as it looks like, it could move between this and this zone. So this and this, you see, the white line that I just created, it could move between this and this before it either breaks or bottoms out. Momentum indicators are important because they show us where price could be going and where the trend is. We also have to look at the bigger picture. I'm sure you've heard the saying before, a picture is worth 1,000 words. It definitely is. Most traders, and I'm going to show you something very important, most traders only look at this area, okay? This blue area that I put. Most traders will only look at this, and they will only look where this is. And that is the biggest mistake they make, because they only look what's happening now. The surest thing, and it's something that you can read in religious books as well, such as the Bible and many others, is that history, what was, will be. Things improve, things change, of course, but what happened in the past can happen in the future. And this is the law of vibration. That means at certain points, when something comes where it vibrated in the past, it could vibrate in the future. And some of these vibration areas are much stronger than others. As you see, this one here has recently been broken many times, up and down, up and down. So this is a very dangerous one, or a very profitable one, because every time it's come, it's broken and broken. You see? So that just indicates to us that we have a very solid opportunity to buy or sell once price heads upwards. So if price heads upwards, this will indicate to us that we could be in a position to buy. Not for long. This will be a very quick trade, but still a decent trade. We see that this area has been broken once and then shot right back up, but then broken again the next day. So this is Thursday. I'm going to give you, over here is Thursday, and the next day is Friday. As you see, price just shot back down. It's quite simple and quite easy to do, and I'm going to teach you how to do this on Skype when it starts working properly. There are some issues with it worldwide, and then you can ask me the proper questions, but Just write in the message box if you have any questions so far. And if you don't, please state that you don't. Yes, something similar to, yes, as you would know them as support and resistance lines, but used by a very different method. Yes, something like support and resistance lines, but like I said, it's a bit extended from that. So look, other people would draw support and resistance lines like this. They would put them right there, you see, because price vibrated over here, but I don't have it there. I use different rules for it. And I will teach you. I will teach you about this. But does that look interesting to you? Okay, great. So this is what I'm going to be teaching you. But to begin with, before we do anything else, we need to establish something very important, and that is a trading plan. I'm going to send you a list on the email. I'm going to send you a list in an email of what your trading plan should consist. But here's something, just one very quick part from your trading plan. Before you even begin to trade, you need to know what your outcome is. So right now, let's say you're going to begin the demo account. You can't just open trades blindly because let's say if you go to buy a car, okay, you won't just buy the first car you see just because it looks nice, right? You're going to check the car. You're going to look into it a little bit. You might even take it to a mechanic, a specialist, and then you'll buy a car. The biggest mistake traders make is that they just open too many trades. They just open and open and open and open. Also, this is very important what I'm going to tell you. It's a metaphor. Don't take advice from a blind man. That means that if you wouldn't trade, let's say if you don't believe that the other person has enough knowledge to educate you on something, don't take their advice. Whether it's me or someone else, better take your own advice and learn from your experiences than taking somebody else's advice. Sometimes we have to get burned to understand this, but it's normal. It's normal for that. So it's very important to understand this, and it should be a part of your trading plan. Here is mine for today. First of all, I have a specific amount of money I want to make, or I have a specific amount of money I'm willing to lose. This is very important. You have to have both sides because we can't predict exactly what will happen. We can be very close to it, but if we're going to have a bad day, sometimes things just don't go our way. We need to be aware of what are we willing to risk. Okay, this is very important. So if you're willing to risk 3% of your account, That means on $1,000, if you lose $30, that's it. We stop trading. But what happens? What do we do after? The last thing you do after you finish trading, no matter how bad the day was, even if you lost everything you had and everything that you borrowed of someone and you're in a mess, you still take out a little piece of paper, a little journal that you have. I've got one, I'm holding it in my hands right now. And you document what exactly happened. Why did you open that Euro USD sell? Why did you open it? So you write down the reasons, you write down the time. You need to have an idea, because one day you're going to look at that and you can even go back in time and understand where are your mistakes. I can understand in the best way, in my team, what you're doing wrong and what you're doing right if you document enough. So first things first is opportunity exploration and risk management. That's the first part. I would even go as far as actually visualization, which is like, let's say, something that is used in neuro-linguistic programming as anchoring, and even anchor yourself to the idea of what you want to achieve at day's end. Then you're going to look for an opportunity. Looking for an opportunity is as simple as what I just did. You see, it's as simple as this. I've drawn a lot of lines, and we're not rushing. As you see, price is heading down, just like I said, to this area. If this area is broken, price is heading to this area. That's 20 pips. Momentum is still high, but if we inject our chart with this indicator, which is a mixture of RSI and stochastic, you see, there is no way we're going to take this trade yet. Price is in the oversold zone. Oversold zone means it's not very good for us to sell. It is a better idea to buy, and I'm going to show you why. Price just recently stopped right here, at the same area it is now. So price could break this area a little bit, but I'm telling you, there is probably an 85% chance that this price is going to head right back up there. So I will wait for the next candle. It might take some time, actually. It's 48 minutes still for the next 1 hour candle. But let's go on the 15-minute chart, because before we enter a trade, we have to confirm it using 2 time frames. Either a 1 hour and a half an hour, either a 1 hour and 15 minutes, either a 4 hour and 1 hour, 2 time frames to confirm an entry. Do you see these trades I opened before? One of them is now 15 pips, the other one is just 0.8 pips in a loss, and this one is only 1.5. So even if I close, I win $30, and my risk was minimal. But obviously, I'm sticking to my decision of what I decided to do, and I know that I'm going to reap the rewards, or I'm going to lose minimal funds. I'm never going to lose enough chips to not trade again. So, like I said, this is an area of interest. This is in the middle area. So if I put this on 80, and don't worry, this looks like rocket science right now. I promise you, our team is educated enough and motivated enough to assist you and pretty much everyone else on how to do this. So price has just come out of the overbought area. It's going to head down. Once we have double confirmations, which means this is going to head down here, and this is beginning to head up, and I could even open a trade here. So let's say, look, this account has 7,792. Let me just show you what I'm going to do. 7,792. My risk factor, I'll put it into 1%. Okay? That means I can risk $75 in this, but I'm not opening such a small position. So let's go to this 38 pips. So basically 39 pips. That's my allowed risk. So if we're opening 0.2, we're going up 38 pips. We'll drag it down to 39, we said, 39.1. We're going to move our take profit just for now at this area, and then we might move it upwards. But we're doing well, and I just wanted to open a live trade with you and show you. I'm pretty confident the price would head upwards, and I'm going to take a quick screenshot of this and send it back to you later on once you're, well, basically just monitor this trade. USD CAD, I went by, and I told you for what reasons. 1 reason, 2 reasons, and here's the 3rd reason. This is not the most solid trade, but we're almost in a profit here as well. So our 3 positions have turned all green. We're just expecting the 4th one that we just opened. But yes, things are looking good. Like I said, there is a good chance price will head up. The dollar has gained strength because all of these are Euro USD, AUD USD, and Euro GBP. You have to know that the British pound has been following the dollar for the last couple of days. So I'm very confident this trade will head into a profit within the next half an hour towards an hour. So 4 trades are open right now. Even if we close all of them, we're making $42 with minimal risk again. Minimal risk. Do you have any questions for me? Okay, great. So, like I told you just earlier, you remember we were looking at the Euro USD and I said my target area is around here. Well, as you see, price is pretty close to it right now. We're only about 16 pips away. This trade is about to go green that we just opened, and in probably 5 seconds it's going to become green. Maybe a bit more, but within the next minute or two it's going to become green. And yeah, we're pretty good on that one as well. So we're expecting the take profit here is 37 pips, just as much as the risk is. So just about 16 pips away, and we're good to go with this one. I might get out of it sooner for the reason of because price just stopped recently on this area that's just highlighted now. This morning, when markets opened, price injected and went upwards. Or there is a good chance that this is just a correction from the big drop here, and then we can see the price head below this red area here. Yeah, momentum still high. That means price has just moved out of the overbought area and is heading downwards. We can see that recently price was very oversold, and right now it's not very overbought. So that indicates that there is much more momentum towards the downside. Even here, with this big move upwards, look at the line. You see that the price didn't even go to the overbought area, so that was just fundamental. Our trade has just gone into profit. The one that we opened, now it's negative, but it's like I said, I'm very confident about it. Yeah, Euro USD sell all the way for now. There is a few announcement today, but definitely a sell. Do you have any questions for me? Or do you have anything that stood out to you? Something that seems interesting to you? Well, you know what? Actually, you have a microphone. I can unmute you, I believe. I've just unmuted you. Can you try to speak using your microphone? No, I can't. Okay, so I'm going to end the session and just get back to me when you finish with that. As you see, all of our trades are now very green. Get back to me when you're ready for the next session. Just send me a message on Skype. But like I said, it's a worldwide problem with Skype. We're having a problem with it as well. I can even send you the recording of this webinar so you can actually review it. And if you have any questions, you can just send that to me by an email or through Skype. Definitely will. Okay, so I'm going to end this one. Thank you for attending. I wish you a gorgeous day, and I'll speak to you soon. Bye for now.